what do you think is exactly happening here in the economy? If the data shows so much strength, but we know anecdotally that so many people feel stretched, how do you explain what's going on?
Well, I think the strength is related to the employment rate, and that's great, or it's in a good place. But you can't not, you have to also talk about surging gas prices, sky high mortgages. I mean, rent is at an all-time high. I mean, if I'm correct or not, rent rose 6.5% in the last 12 months when you look at the previous December. Inflation is real. You almost can kiss this notion that it's even under control or slowing down. To this average American, things like food, fast food, is significantly more expensive than it has been in the past. And this is causing constraints that you wouldn't imagine, where people are living really, really slim, despite having solid employment.
One dynamic that I've been wondering a lot about is if you look at the data coming out of the largest banks, you see a drift higher in FICO scores. This idea that they are catering to the consumers with fortress balance sheet. If you look outside of those with a credit score outside of 750, let's call it, and that's even lower than Bank of America's average on a lot of business lines, how much do you see them having to put ordinary goods, groceries, gas on their credit card bills at a time where also APRs are sky high?
Well, I think not only are APRs at a sky high, balances on credit cards are at an all-time high. So you're absolutely right. The average consumer is putting more everyday expenses on their credit. That includes planned expenses and unplanned expenses. Those things still happen when you live every day. And that means a medical emergency, that means the flat tire. So, what we see is that, number one, there's more consumers today that are over leveraged than ever before. When you think about a product like what we offer, which is a community-based loan for a few $100s, we see more users that make over $100,000 a year and have a healthy FICO than we've ever before seen in our history. It's just talking about a couple of different challenges. I think the number one challenge is expenses are higher. I think the number two challenge is that getting a flexible loan to manage the rising costs is actually also extremely difficult.
How do you think about the crunch consumers are being put under as they take on more debt? Do you think it's going to create a vicious cycle of sorts?
Yeah, I have a big problem with the concept, right? When you think about the FICO and you think about credit, paying a credit card over time is what it's taught. Installment loans are what we have communicated as a benefit. It actually creates the current problem, which what you see is stable or increase in FICO scores, but consumers being over leveraged, meaning they have too much credit, meaning their balances are too high. This creates a scenario that they're living in a really sensitive place. In 2023, we ran the cash poor report. And this is what we were talking about, where consumers are cash poor but credit rich. And that is the same problem. It's almost an evolved problem that we're seeing today, where more expenses than ever before are being managed by credit facilities and credit products that are paying over time and incurring a ton of fees, which continue to kind of create this cycle. We think it's a big problem.
What's not being reflected in the data that you see from the Federal Reserve or a lot of these banks? The reality of the buy now, pay later revolution, let's call it, is not reflected in FICO scores and it's not reflected in credit card balances. Are perhaps consumers more levered than meets the eye?
They're definitely more levered, but these products only exist because consumers need them. They're demanding them, And it's not like the traditional players were trying to introduce these products. It's not like our traditional banks were trying to think of innovative solutions that were meeting the needs of these consumers. These fintechs have been doing this. My company has. So for me, I think what's the problem in the message is that I truly believe regulators and politicians need to figure out how to work alongside technology and innovation to start to bring better products or support the products. I think there actually needs more support for the buy now, pay later, the earned wage access, and the community-based finance solutions of today. Because when you think about their penetration compared to the traditional penetration, and let's just say our numbers, 80% our users are over leveraged using a subprime credit card or some credit card facility. Traditional players are still by far the number one players to everyday Americans.